Hello, everyone. Welcome back to another live trade recap. Today, I'm not feeling so well, a little under the weather. I have a migraine. I actually wanted to take the day off, but then convinced myself otherwise. And let's take a look at what we did today. First of all, the market today, we're still on a fighting uptrend. If we go to the daily chart and look at this kind of barcode, what you'll notice is after the sell-off, previous sessions all the way down, we start to fight back up. This is where a lot of the chop happens, and now it seems like order flow is reversing to the upside. With that in mind, we are still coming up at a lot of bearish sell zones and bearish fair value gaps, right? So you see the 4-hour fair value gap we're in right now from yesterday's session. Yesterday was a sell-off, and then right above we also have another 4-hour bearish gap. Looking at all of this, it's a little hard to determine what might happen, what's the play, and it's very important to understand at days like this, when you determine order flow is reversing, we could be in a chop. It's important for you to let the market tell you where it wants to go and take the first obvious liquidity point as your target, because you could see range bound activity for absolutely no reason. Today is Wednesday, 19th of March, and we have a lot of news along with all of this price action. Beautiful price action comes with beautiful news as we have projections, FOMC statements, press conferences, and federal funds rate. So a lot of these are very heavy topics, and markets usually don't like to trade very well during these times. Now, you can get a good trade in, you can get a good move in, maybe early in the day, maybe after information has dropped, what Powell says. And that's exactly what we took. Again, let's not forget, I am live with a small account. There's a lot of things here that I would like to not do in the future, but it's a little difficult when you have a small account, and you kind of have to just keep taking your base hits. So you might be looking at this and you see a clear up move pattern. You see prior day high. If you look at the right side of your screen here, the 1-minute chart, the prior day high level, it lines with the 1-hour bearish gap. So if you look at the 1 hour, here's the 1-hour gap right there, okay? Going back to the 1 minute, you might be wondering, if it's so clear, why did I put a stop loss here? And again, I would like to say this is a proper stop loss based on my system and thought process, but it actually isn't. It's a very emotional stop loss based on money, right? Because of a small account, understanding the market price action may not be the clearest. I didn't want to sit through a potential complete downturn right here using our morning high, this 9:32 a.m. high, as a liquidity sweep, because we have seen that happen before. Actually, not even a couple days ago, we've seen this happen. So with all of that said, there is a better way to place the stop loss, and I'll tell you exactly where. Is this stop loss a bad one? I don't think so, based on my small account and price action. It could have been better, and it should have been better, but it's also not the worst thing ever based on why I chose it, why I trailed stop loss super tight, because I wanted to get stopped out, because of money. 100%. It's really hard not to think about your P&L, especially when you have a small account where one loss of like $50, $80, $90 can unfortunately set you back, especially when you're trading in a horrible price action like this. So let's go over the trade. Market opens and we just do chopping. We take liquidity, buy side liquidity up here, and then we're still chopping. We start to push down. Notice a 1 minute bullish gap here as well. And even then, even when we came here, price action isn't super good. Okay, we're still chopping. I'm looking at it like, okay, well, we saw lower high. It went all the way down, came close to the breaker, didn't fully even take it. I don't even know, to be honest, what liquidity did you even grab here? And then the market started reversing, right? You could say it grabbed the breaker. The breaker can work as a reversal point, 100%. So this breaker is actually based on the 15-minute, right? Actually, I should probably label it better. 15-minute breaker. So at the very left is my 15-minute chart. Middle is my 5-minute right there. And on the right is my 1 minute. I guess you could say it took the breaker, and then we started pushing up. This is still being affected by the 1 hour bullish gap, this blue zone right here. It came into the gap and then price started reversing. As it's reversing, I started to notice these, right? Bullish 1 minute gap, you have a bearish inversion, right? So this bearish inversion here and this bullish gap was the thing I was looking at. Now, when price came here, it was very choppy, and I was trying to see if this becomes a lower high. It kind of did, and then it kind of didn't. So at this point, I'm not fully convinced that we're going higher or lower at this point. When we tapped to the bullish gap and we started pushing up here, and then this candle went up, that's when I was like, okay, I've seen this price pattern where we come back, kind of consolidate, and then push higher. A lot of you, if you're looking at pattern trading, you could also say this is like a cup and handle, maybe a reverse head and shoulders, actually. So based on that, I got in here, my entry, stop loss at the 1 minute bullish gap. So why did I leave it at the 1 minute gap? Usually you're supposed to leave your stop loss on the other side of your fair value gaps. The reason I did this is because, one, I still don't fully trust price. Not entirely, even though I see the price action moving properly. I see it took liquidity, but I'm still cautious. And the second why it worked is because we already tapped into the bullish gap. So I'm not saying it couldn't tap into the bullish gap again. I'm just saying that because it already tapped into once, we already saw the reaction. There's a higher chance that we see the movement up as they started closing, right? So sat through this a little bit and then really started moving, came all the way up here, and then we started doing this. At that point, we still don't have this, okay? So if you're looking at the 5 minute bullish gap, we still didn't have this, okay? So this is what I was seeing. It came up and it came down. I did see the 1 minute bullish gap, which in my head, systematically, I'm like, if I'm gonna trail a stop loss, I'm gonna do it over here. And if it breaks the 1 minute, then I get stopped out. Okay, that's what my systematic method was telling me. My emotional side, which was like, well, you know, I don't want to eat through all of this profit. And then what if like one candle wicks us out all the way back down here just for it to keep going, right? I'd hate that. On top of that, small account, this trade actually broke us up into the $1,000 territory. So the account is actually sitting at $1,000 and some odd dollars. From a $900 account, eating all of this away is kind of bad. On top of it, you know, again, like I said, I'm under the weather. I have a migraine and I just didn't want to trade today at all. So I'm like, let me just take my cut. If it goes from here, then it'll go. If not, I don't want to risk any more money, which honestly isn't the best way to think about it. Should have followed the system and just eaten the loss if it came back all the way down here. But as you can see, it didn't. This was a perfect continuation model right here. It came down here into our 1 minute bullish gap and it just went to my target, my main target being prior day high, as well as the 1 hour top right there. So lessons to be learned. No matter how you might feel about money, even in a small account, it does, like, systematically you could say, okay, small account, small base hits, sure, but you could also argue that for small accounts, when price moves, this is very beneficial for small accounts, right? We were looking at a 4 point something R versus a 1.6 that I took. So basically a $433 profit target versus $130, right? So if I was to hold it and price was respecting my level, this is actually better for a small account rather than saying, I don't want to take a loss because I'm scared because I have a small account. You know what I mean? It's kind of like a double-edged sword. But then again, we live, we learn, we are seeing the trade setup play out. I am building confidence in my system time and time again. So I'm in no rush. Again, this is basically the third day that I'm trading a live account, a very macro account. I am in no rush. So learning all of this day by day is very beneficial. And I would have loved to trade this properly. Maybe in another day we'll catch it. But that was pretty much the trade. I'm happy with it. I don't want to take any other trades. I want to actually go back to bed. And with that said, I hope you guys like the video. I hope you follow me on Twitter. I do post there a lot more. And enjoy the live trade recap and take care of yourself. Remember, you don't have to trade every move, and taking a loss following a risk management strategy is always very important, which we are implementing right now. This is a 10% risk, $90, and then we got $130. I'm happy with that. So enjoy the live trade recap.